My name's Deepesh Patel, editor at Trade Finance Global. Today we're talking about trade and structured finance and the landscape in Ukraine. The humanitarian and economic war between Russia and Ukraine has sent ripples all around the world. Practitioners, financiers and governments are urgently stepping in to try and help. Boosting and restoring trade exports will be key for Ukraine, as well as ensuring a safe entry route for trade imports. I'm joined this morning by two trade and structured finance experts in Kyiv, in partnership with the EBRD, to which Ukraine is in their top two investment destination markets, second to Turkey. Today, I'm joined by Vladislav Berezhny, Director of Trade and Structured Finance Department at Credit Agricole Bank in Ukraine, and Andy Romanov, Deputy Head of Structured Trade Finance at Ukrgasbank, Ukraine. Thank you both for taking the time out of your day to join us today. Good to have you on Trade Finance Talks TV.
Thank you for inviting us.
Thank you. So, quick elevator pitch. In no more than 30 seconds or so, who are you, where are you from, and what do you do? Andy, I'll start with you.
Hello, my name is Andy Romanov. I am Deputy Head of Structured Trade Finance Department of State-owned Ukrgasbank, Kyiv, Ukraine. Our team provides trade finance transactions to the full range of Ukrgasbank clients around all parts of Ukraine. Thank you for this opportunity to inform our colleagues and the banking community about the current situation in the Ukrainian banking sector.
Thanks, Andy, for joining us. Vladislav, over to you.
Thank you for inviting. My name is Vladislav Berezhny. I'm working for many years as head of trade and structured finance department at Credit Agricole Bank in Ukraine. And we think about trade finance as a special sign of techniques in banking industry. So we so-called teach our clients to think different when they finance trade. And then, of course, we generate some trade finance transactions in all areas, fees, guarantees, overlighting, promissory notes, factoring. So we do everything for all range of clients at Credit Agricole in Ukraine.
Thank you, Vladislav. Andy, can you start by telling us what the trade and trade finance landscape looked like in Ukraine pre-war?
Trade and trade finance market in Ukraine in the pre-war years grew and developed very slowly. However, the years 2017-2019 were quite successful in terms of increasing imports and export of goods services. In 2017, exports were about 143 billion hryvnias and imports were about 162 billion hryvnias. In 2018, gross exports were about 160 billion hryvnias and imports were about 191 billion hryvnias. And in 2019, exports were about 164 billion hryvnias and imports were about 195 billion hryvnias. It was a growth. 2020 started well, but then the COVID-19 pandemic and all restrictions hit international supply chain very painfully, which affected trade and trade finance in general. In 2020, exports in Ukraine were about 164 billion hryvnias and imports were about 168 billion hryvnias, minus 27 billion hryvnias. In 2021, trade quickly recovered and exceeded the pre-pandemic levels, which was evident in the growth of trade and trade finance transactions in Ukraine. In 2021, exports were about 222 billion hryvnias, plus 58 billion hryvnias compared to year 2020, and imports were about 222 billion hryvnias, plus 60 billion hryvnias.
Thanks, Andy. So continued growth, obviously hindered by the pandemic, but we saw a recovery post pandemic before the conflict, and obviously some of the largest exports are seed oil, corn, and wheat. Vladislav, how has that changed since the beginning of the conflict, and what's the current situation from a trade and structured finance perspective? So, say, from a CPRI perspective, and also from a provision of trade finance to Ukrainian corporates, and also perhaps even an FX perspective.
We see that in general, trade finance is a little bit different area than export and import. In fact, Ukraine has a certain lag in development of trade finance. The successes that Andy has outlined in trade that Ukraine has, in fact, are not matched by our trade finance industry. Unfortunately, this is the result of certain bugs in evolution of our banking sector, and specifically, we have a very strong impact of international crises that happen from time to time when the lines on Ukrainian banks are being closed or limited. And therefore, we have, in comparison to all those huge amounts of export and import, trade finance volumes are quite modest. So step by step, we have reached 100 billion hryvnia of total trade finance at the end of 2021. This is not bad result, taking into account the risks of Ukraine. But of course, we expected some more growth, and we mobilized all our forces together with the whole banking community, and particularly trade finance banking community in Ukraine, and want to push these volumes further. However, the war has changed the landscape drastically. We have seen by the end of the first quarter, so within 1 month after the war started, we have seen a 10% drop in volumes of trade finance portfolio. We have seen also the substantial decrease of origination because of course, trade breaks, blockade of seaports, very difficult reorientation of export flows to the landlines, and of course the import has been almost interrupted, except for goods that are critical for the countries that is under aggression. So some military goods, some fuel, some particularly important spare parts, and vehicles that are in demand in Ukraine, particularly in the war areas. So we see that this trend is developing, so not growing but going down. So we see that some operations will decrease further, and by the mid-year, we expect that volume of trade finance portfolio would decrease by further 20 to 30%. So that's where we are now. Of course, we will be analyzing the trends, and some relocation of Ukrainian business provides new opportunities for development of business and cross-border trade. Of course, banking community will be eager to support this, but more details, of course, we will be able to provide you later this year at the traditional conference that we conduct in November 2022.
Thank you very much, Vladislav, and good overview. I mean, what I'm hearing there is the trajectory for trade, has continuously been on the rise, but actually the trade finance industry as a product and is less developed, and that's actually causing quite a few problems, and it's also coupled with the problem of continuous cutting of the correspondent banking lines. I think this combined and coupled with the war is going to see
it is one of the factors.
Yeah, and that's going to cause a huge dip on that trade, on your trade finance portfolio. Andy, are you seeing the same issues, and how has the local banking terrain changed for you?
Well, trust in the Ukrainian banking system is consistently high, There is no massive outflow of deposits, which is very important. But unfortunately, the NBU recognized several banks as insolvent and withdrew from the market, such as the price of the aggression that Ukraine has undergone. On 2nd June 2022, the NBU raised the interest rate from 10% to 25% to ease pressure on the forex market and stabilize inflation. On July 21, the NBU lowered the official hryvnia exchange rate to the US dollar to 36.5 hryvnia per $1, immediately 25% down since the beginning of the war. This step gave an influx of foreign currency to the interbank exchange market and the supply increased. Deposit rates in hryvnia are now at 17% per annum. Respectively, loan rates are about 20% per annum and higher. For Ukrainian businesses, these are very high lending rates, so bankers predict a significant decrease in the loan portfolio in general and the banking system overall liquidity. Banks have introduced payment holidays and are already restructuring their loan portfolios. The situation is quite complicated, but the NBU closely monitors and controls it.
Thanks, Andy. It's extremely nuanced and complex, and it sounds like banks having to work extremely proactively just to stay fit and actually the good news is really around the deposits and the fact that they're not withdrawing. Vladislav, what's the commitment on the ground looking like from your perspective, and also what's the commitment of the Credit Agricole wider group?
That's a very, very good question. I think that for Ukraine, it is really very important to feel the support of the global banking community, of the global economic community. And that is the case for Credit Agricole. From the very beginning, Credit Agricole has confirmed its commitment to support bank in Ukraine, to support clients in Ukraine. And that commitment has been implemented very strongly in several programs of support, in aid for relocation of people who moved outside of Ukraine. Some specifically important help was provided by our colleagues at Credit Agricole Poland, where we have been offered all the human and business support, including a possibility to work in our hub in Wrocław. And what about Ukraine? We here continue to work and give loans to our clients, provide trade finance, issue letters of credits and guarantees. So we are keeping our business on the level that we had on the 24th of February when the aggression started, and we maintain our relations with clients on the level that helps them to survive in these difficult conditions. This is, of course, all blessed and supported by Credit Agricole Group globally.
Thanks, Vladislav, and sounds like a very strong response there from the wider group. And Andy, I guess even bigger, how has the international finance community responded and supported, or indeed perhaps even withdrawn support in response to the war?
Well, such a large-scale war for the banking community is an extraordinary event. The sanctions that followed against Russia for the attack on Ukraine have also made the job of bankers worldwide very difficult, especially in trade finance transactions. Direct interbank credit limits without cash cover for Ukrainian banks are closed. This is an objective reality. The cost of financing has also increased, but this is a global trend. The EBRD, EIB, IFC, and other international financial institutions perform their functions very well and on time, supporting Ukrainian banks and their clients. We are very grateful to the EBRD, EIB, IFC, and everyone who now supports Ukrainian banks, customers, and Ukraine at this challenging time for our country.
Thank you very much. And Vladislav, how has this perhaps altered relationships? Obviously, you've got your book of corporate clients, but obviously the scene is rapidly changing. So how is the Credit Agricole Ukraine division had to adapt to accommodate new corporate customers, new trade routes, etc., etc.?
I should say that, of course, the crisis like this, the war times, is not the easiest period for acquisition of new clients. So this is done only on exceptional basis, since generally we are in a certain position of strict limiting our increase of risks for the bank and for the group. What helps is that Credit Agricole is already 30 years in Ukraine, and we have relations with almost every big industrial, agricultural service company in this country. And therefore, we have, of course, during crisis times, some kind of reunion with old good friends that have relations with Credit Agricole, but maybe conducted business whenever opportunity arises. But in times like this, we see certain return of deposits. We see people who are looking for safe harbor going back to banks with reputation and with history of commitment to support of clients during crisis times. And you, of course, know that in Ukraine we are quite used to overcome some difficulties. The latest was in 2014 when Russia had just started the aggression in Donbass, and at that time, after the revolution, after the change of power, Ukraine had very challenging times, and again, many banks have been in a position to consider how to extend business with clients, how to restructure the loans and trade finance transactions to maintain their business and not interrupt trade relations, business relations. So the banks who do like this, they continue to offer support, and clients trust banking system, particularly because this is the culture of top 20, top 50 Ukrainian banks that maintain business whatever happens, and have a priority of support for clients over the short-term benefits or crisis times closure of portfolio just to live through that year with less risk. So this is, I think, in Ukraine more and more a culture of banking, and that's what again Andy has mentioned, that our continuous relations with clients and global partners helps us to live through this extraordinary year.
Thanks, Vladislav, and real commendable actions to both groups. I think maintaining trust is absolutely critical during these extraordinary times, whether it's guaranteeing businesses, keeping and maintaining holding deposits, reassuring and helping corporate customers helping customers restructure their debts during times like that. It's often easy to move to defaults and paying claims, but actually there are a lot of actions that can be taken before that to help those corporate customers navigate, extend finance terms, etc. Andy, what can the international finance community do to support the banking sector in Ukraine even more, and what can organizations such as the EBRD continue to do? Do we see perhaps more scope for innovation in the market? Are there more efficient multi-tranche financing structures, more guarantees that can be offered to help Ukrainian businesses continue to operate?
Well, as a trade finance professional, the first answer is a clean interbank limit. Let this limit be small in amount and short in terms, but will be a strong signal of support for Ukrainian banks and their clients. Clean limits will show face in Ukraine, our economy and our banking system. I understand the complexity and the risk of foreign banks, but I believe it is possible. I also ask partner banks not to refuse new Ukrainian transactions or new unfamiliar clients. It is necessary to expand and strengthen the cooperation of private international banks with EBRD and IFC concerning Ukrainian banks and transactions.
Thank you very much. And Vladislav, do you have any calls to action to the international finance community? Obviously, we've talked about really clearing the correspondent bank cutting lines problem that we see, not refusing Ukrainian transactions, expanding cooperation. What are your calls to action?
I would say that we now think about Ukrainian market as a big family, as a big cooperative team. We don't think in terms of my survival is my survival. We consider that Ukraine should win this war as a nation, and we have all our part in this task. So banks unite, and particularly trade finance community unite in these efforts. We have already conducted a conference dedicated to the topic of trade finance war in Ukraine, and we disclosed all information. We described the situation to our global partners and exactly announced, voiced the demands that Andy has just mentioned, to keep lines open. Let it be short, let it be small, but the lines should be open, because even the small bridge helps us to overcome this troubled water. Without bridge, we are stuck on the bank. So we have to maintain this lifeline. We have to extend whenever it is possible to give another 1 month of tenor or give another 1 million of amount to banks, particularly Ukrainian-owned banks that do not have luxury of support from mother company. We have to maintain state banks with some support from international financial community, because Ukrainian state banks are instrumental in financing key industries, key directions that help this country to win the war. So we need, of course, some innovation, as you have mentioned. We need to be creative, and we see already this creativity from our global partners with their proposal to share risks, to provide some donor funding to help Ukrainians live through the cold winter, private individuals as the clients of the banks, to help business to restore or relocate their operations to safer areas, or to restart business if it is completely destroyed by shelling in the east. This is also something that is unprecedented. We had no such banking products in history of banking, I think. And particular European banking, maybe since the Marshall Plan after the Second World War. So these days we are in a kind of pre-Marshall Plan development. Even despite the war is going on, we already think about how to help our clients to restart their business, how to make safe sales through the lifelines of export and import, to widen the gates on the border through some reforms of customs, both on Ukrainian side and on European side. We have now the transition of procedures in logistics to European standards. That's again a very smart step at times of war. And we have a huge digitalization leap in our business. Everybody will tell you that without such digitalization, without modern technologies, Ukrainian economy would be stopped in 3 days as Russian aggressors planned. Now we see that Ukraine is working hard, and we are eager to really create any new product that is required to help our clients to strive.
Thank you very much, Vladislav and Andy, and you know, a case in point around Ukrainians working extremely hard, and you know, huge commendations to both of your groups for really maintaining the banking sector in Ukraine and promoting trade finance as a force for good here. I think you provided some real call to actions for the international finance community, and this is a true story of bridges, family and unity. Thank you very much for taking the time out of your very busy days to join me and speak on trade finance talks, and some really clear messages to the international finance community. Thank you both.
Thank you.
Thank you for the support.